Hey guys, hope you are all fine and dandy on what I hope this to be a great morning. Last week's videos were a success. We covered some important topics, the hidden costs that aren't talked about when it comes to Wall Street playing games with our money. We talked about what happened in 1971 and then we hinted at some of the reasons as to why Wall Street is never punished. Well, I promised you answers, and today we are going to start unraveling them. I am talking about going from the SEC all the way to politics in the government. I am not pulling any punches on this. This will be a small 3-video series concluding by Friday. I have to split them up to make it a bit more easily accessible and nothing too long where you guys will click off. I want to thank Mr. Taibbi, whose work has been phenomenal in all of this. He inspired me to make this video, and I have quoted him in previous videos before. His work is a great source of inspiration for me, and this video is based on much of his investigative diligence. We have tons of information and grounds to cover, so before we get started with today's segment, let me quickly disclose and state that I am not a financial analyst or advisor, and that all contents discussed in this video are provided as opinions. All efforts are placed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Everything presented is evidence I collect, and all opinions are based on research, experience and knowledge on the matter. Why don't they ever go to jail? The answer to this is as paradoxical as it could come, and the answer is very complex. You could say politics, or blame a secret order that rules the world, and to a certain degree, your answer would not be far off. In the world, an act is only a crime if the government deems it so, and they continuously enact legislation to punish petty crime and let the big criminals scot-free. Federal regulators and prosecutors let banks and financial companies sign agreements where they pretty much wash away culpability and infringements without even having to admit guilt. As we clarified on the last video, criminals in financial institutions do not even pay their own fines. Due to some well-placed blind spot in the law, federal regulators and prosecutors make agreements with criminal institutions and members where when they sign the wrongdoings, due to them negotiating in the disclosure that they aren't guilty of anything, they can simply write off these fines as business expenses. This allows them, under the rotten eye of the law, to pass off their debt to consumers, and even get tax write-offs because it's a business expense. They defraud their own customers and then make them pay for being caught. It's so ridiculous that it's funny if you are cynical like me. Many say the law would not be able to stop this from happening, and that legislation against it would not yield good results. I disagree 100%. We take away personal liability from this, and it would cease to exist by the next day immediately. We start putting minimum sentences of 10 years for fraudulent acts, and JP Morgan's CEO will become the most law-abiding citizen by the next day. He would probably write a book about good behavior and how this changed him for the better, being a repeated criminal whose actions clearly show serious signs of psychopathic and narcissistic behavior. Everything to them is a tale of how the world wanted to burn them, but that's beside the point. We have gone far too ahead of ourselves. I promised you guys clear explanations and answers, and I intend on delivering. So, to begin with, let's undress the financial world. In the world of Wall Street, there is the public sector and then there are agencies, some regulated and others who self-regulate. You have the banks, mutual funds and hedge funds which you probably know very well by now. You have insurance companies which I plan on doing deep dives in future videos. Then you have securities and commodity regulators like the Federal Reserve, the Office of Comptroller of the Currency, the Commodity Futures Trading Commission and Federal Deposit Insurance Corporation. You also have the self-regulated organizations we talked about like the New York Stock Exchange. All the regulators that we just described have individual and unique duties and goals when it comes to protecting the markets. Then there are the big boys in town. You have the ever more vigilant Securities and Exchange Commission, whose restless endeavors have secured the bright future of us all. That was sarcasm, by the way. Then we have the Justice Department. The SEC is a watchdog, as they do not have prosecutorial power. They simply investigate and watch for violations like insider trading, making sure all financial information is produced and published in accordance to what is really happening. If the SEC finds evidence and build a case to prosecute someone, they tap the Justice Department, whose job, as you might imagine, is to take the bad guys to court. None of the agencies or organizations we talked about, except for the Justice Department, have prosecutorial power. The SEC is typically the one the other organizations and agencies tap when they notice something suspicious, and the SEC builds a case of evidence which they then submit to the Justice Department. As you might have conjectured, the SEC and the Department of Justice work hand in hand. They are two sides of the same coin, as one could not work without the other. In theory, the output of all these watchful eyes should be putting filth after filth out of Wall Street and into jail. But something interesting happens in all of this. When it comes to Wall Street, the justice system does an abysmal job at punishing financial crimes, and there is a large growing body of evidence that suggests that not only are they not doing their jobs, but that they have actually evolved the whole process to be an effective mechanism for protecting financial criminals. Unraveling this stuff will take us back a little over a year, when the cases of the biggest corruption in American history were thrown aside, being pursued too slowly due to the fumbling of governmental bureaucracy that we have sadly come to expect as a consistent state of reality. Let me speak to you at an individual level, almost like we are face to face. The problem with our current economic system lies in the fact that we have created a class for people whose aggressions and misbehavior are no longer seen as crimes under the eyes of the law. We have made a class for criminals that make them exempt from prosecution, regardless of what they do against the middle or lower class. Based on my research, the only time someone committed a notable crime and went to jail was when Bernie Madoff defrauded his clients, which all happened to be elite high-class celebrities and top Wall Street members. The only crime ever punished, according to data, is the ones performed against the high class, but we will get to that at a later time. Going back to the SEC and the Justice Department, if it should even be called that, they have transformed themselves, shifting to be keen on servicing to be agreement writers that remove liability and responsibility from criminals, and never exercising punitive measures that bring about any justice. In fact, if you are laughing at any of this, let me tell you that you are not the one laughing the hardest. Former chief accountant for the SEC Lynn Turner laughs the hardest in the room when it comes to the expectation that we have in thinking that the criminal justice system is broken when it comes to Wall Street. She said, and I quote, "I think you've got the wrong assumption, that we even have a law enforcement agency when it comes to Wall Street." To clarify, a chief accountant plays an important role as pursuing criminal financial disclosures. In the late 1990s, the SEC was zeroing in on Rite Aid drugstore chain, who were using a ton of accounting tricks to cook their books. But upon the moment the agency had collected enough evidence for prosecution and cracking down on them, the SEC decided to immediately delay the case, prioritizing it with other less important stuff, and relegating into the deal with it later file cabinet. Lynn Turner clarified, and I quote, "The Philadelphia office literally did nothing with the case for a year. Very much like the New York office with Madoff." For those that have not watched my previous morning videos, I discussed in detail how the Bernie Madoff event was actually known by governing and regulatory agencies for years before it all blew up. They simply let it slide by until the scheme came to an abrupt ending, and then upon congressional pressure, they were forced to act tough for the cameras and make strong speeches against corruption. So back to the Rite Aid case in which Lynn Turner was involved, what happened was that it dragged on for years, which by the time it finished, there were similar accounting crimes happening at Enron, WorldCom and Sunbeam. In fact, when the SEC punished Sunbeam's CEO Al Dunlap, he was given a mere fine of $500,000 million. By the way, Dunlap's net worth at the time was estimated to be $100 million. He was also prohibited by the SEC from ever running a public company again, being forced to retire with a mean $99.5 million after the penalty. Can someone please go check up on him? For the love of sweet baby Jesus, my boy has been tested in life. You know what's even funnier in all of this? My previous joke. You know how I made a joke about psychopaths and narcissists living in a bubble where everything needs to be about their own grandiosity and that they always end up needed to write up a book about how their world was unfair to them but they ultimate won, like a weird old Western movie? Later in life, Dunlap published his memoir titled, Mean Business. I kid you not, this dude spent the next couple of years collecting royalties from his egotistical last effort. I wanted to check on the sales of the book, but upon realizing that America and many other nations are obsessed with this type of behavior and reward them, I decided not to look at sales figures for the betterment of my health. But if you think these stories end up with just dismissals of cases to be relegated to the never-to-be-investigated file cabinet, you would be wrong. We had briefly mentioned the story of Gary Aguirre, another SEC investigator who was fired after he questioned his supervisors and the agency's continuous efforts to barring him from pursuing an investigation into an insider trading case against John Mack, who would later on become chairman for Morgan Stanley. The story goes that Gary Aguirre was investigating a hedge fund owner and CEO named Art Samberg. Samberg got caught buying a large number of shares for a company called Heller Financial. Weeks later, the company was bought by General Electric. Clearly, Someone had tipped Samberg about it, and closer investigation brought eyes to John Mack. To brief through the boring stuff, John Mack was also caught doing weird trips to Switzerland, interviewing for top jobs at Credit Suisse, which funny enough we covered them a ton on this channel when their business started getting busted after shorting meme stocks earlier this year. Our champion of the light Gary Aguirre was looking into the man for quite a while and collecting a ton of evidence. He eventually told his boss that he planned to interview John Mack, and that is when this tale turns tragic. His boss told him the case was not going anywhere, as John Mack had powerful political connections. As Rolling Stones sourced, the investment banker fundraised Ranger for George Bush in 2004 and backed Hillary Clinton in 2008. I mentioned this because it goes to show politics in this nation are done to divide and conquer, and that the real villains in the story play both sides because they own both sides. Things then started getting even weirder. Morgan Stanley's regulatory liaison contacted Aguirre about his investigation. Morgan Stanley then worked its way up the SEC chain of command. Another one of the firm's lawyers, Mary Jo White, was having direct conversations on the phone with the SEC Director of Enforcement. Funny enough, Mary Jo White was a former attorney for the Southern District of New York, which is one of the biggest cops on Wall Street. I'm telling you, the whole revolving door phenomenon is one of the biggest issues in the country. For those that don't know, revolving door is the phenomenon that happens when members of regulatory public agencies switch jobs to the private sector. They bring with them connections and top expertise that are crucial for Wall Street private companies to put to work in order to commit crimes and avoid prosecution. Morgan Stanley and their firms managed to talk to people at the SEC 4 levels above his head in order to see that no investigation was made. John Mack himself was represented by a man named Gary Lunch, who also happened to be a former SEC Director of Enforcement. Absolutely abysmal set of events for Gary Aguirre, who never even came remotely close to standing a chance against this army of ex-SEC professionals now working on behalf for one of the biggest financial institutions in the world. About a month after he complained that he was being blocked from furthering his investigations against John Mack, Gary Aguirre was fired without notice by the SEC. Disgust and despair in the system is a criminal understatement to be made. This is a good point to wrap things up for this video. I am sorry if your morning has been made a bit unbearable after listening to this, but know that it is crucial for me to tell you this story so that I can give you a full comprehensive picture of why there is no justice. These 2 examples are just scratching the truth, and I have 2 more videos coming to you tomorrow and on Friday to really encapsulate and give you the broadest and most comprehensive overview as to why crimes are not punished on Wall Street. I want to thank you guys for sticking to the end with me. This has taken some effort to make, and I only ask one thing back from you. I ask that you give me your thoughts and opinions on this matter in the comments below. Please be respectful, but feel free to speak your mind. I want to thank Mr. Taibbi again, and give a huge shout out to Ms. Turner and especially to Gary Aguirre. You might have gotten fired for doing your job, but in the process, you have shown what an exemplary citizen is. You are a role model for those like me who seek to bring about change to the world, even if the system punishes us for it. Thank you for all you did and attempted to do, Mr. Aguirre. It does not go unforgotten at all. If you want to really support the channel long term, I have provided links which will be in the description for donations and a Patreon if you would like to pledge a monthly donation of any kind. This support really goes a long way for me guys. All money is spent on improving equipment and other parts of the channel so that we can continue to upgrade the quality of Simulate and Trade. It is my source of income as I am doing this full time now. It makes a huge impact and difference, so if you are able and willing, do consider it. I will see you guys later today. Until then, keep on buying the dip and holding to the moon.